You're listening to the Vacation Rental Key with T&T, the podcast for vacation rental managers by vacation rental managers. I'm Tim Cafferty, and I manage two companies, one in Virginia and one in North Carolina. And I'm one of the two T's.
And I'm the other T, Tiffany Edwards, born and raised in the vacation rental business. I help manage our family businesses from Key West all the way to Kauai.
In the next 30 minutes, we're going to give you our keys to success in the vacation rental business. And we're back. I'm Tim.
And I'm Tiffany.
And I am excited. You know, I learn something every time we get together, Tiffany. Last time we talked about regulations. I wrote down a bunch of notes, and we had some good engagement from our audience. We appreciate the feedback we got, including some who said, you're very opinionated, Tiffany.
Well, you know, Tim, what I like to say is predictions are opinions. So, Karen, take a back seat because we got more predictions today.
Yes. Well, we have an expert who will give us some predictions today, which is why I'm excited. We have Jamie Lane with us, the chief economist for AirDNA. Welcome, Jamie.
Hey. Excited to be here. It's my job to make predictions every day. I'd say if you remember what I've predicted in the past, you're in the minority. And since most people don't remember what I predicted, I'll say my track record's pretty good.
Well, we could be like Ted Lasso here, Jamie. Think like a goldfish. 3 seconds. That's it, right? So if you didn't like what I predict today, come back tomorrow. There we go.
Absolutely.
All right. So, Tiffany, you've outlined some things we want to cover here, and we have a short amount of time, so let's get to it.
Yeah. So, following in line with our last couple podcasts of predicting 2020, also predictions in general for regulations, I thought it was really good for us to discuss where we've been and kind of where we're going. So, as Jamie had mentioned, he is wonderful of researching all over the country, all over the world, making predictions pretty regularly. I will say I remember the ones that I'm either directly on and agree with or the ones that are wildly off. And I remember those. But in 2025, y'all produced your predictions and were right on target. And 3 of those predictions were, first one being the U.S. short-term rental supply growth would slow down, which it did, and that it was going to be creating a stronger pricing power for existing hosts and property managers. You also predicted, number 2, that climate change and evolving regulations would push investment toward emerging markets. And then number 3, that larger vacation rentals would drive market growth. So those multi-bedroom properties would command higher occupancy rates. And so I wanted to give you a minute to kind of talk about those because you hit all 3 of them, 3 for 3 in 2025.
Yeah, that's why I love coming on here because you guys are making me look good. So it was one of our main predictions in 2025 was around supply growth. What's interesting about short-term rental, vacation rentals is supply is so dynamic. During the pandemic, we saw a lot of supply leave the industry. In the years post-pandemic, we saw a lot of supply come in, really a surge of supply. And then we've been seeing supply decelerate from 2023 to 2024 to 2025. And in 2025, we saw a lot of markets go negative. More than a third of markets in the U.S. saw supply decline in 2025 versus 2024, which is not something in a growth industry like what we're in that we're used to seeing. So really key to the supply decline forecast was what was happening in terms of earnings. We have seen overall revenue earned by most short-term rental operators and the money that owners take home has been declining from the highs of 2021 and 2022 down through to 2024. We saw home values reach astronomical highs sort of post-pandemic and has really maintained at those levels. And 2023 and 2024 was really tough in terms of interest rates. And we thought that those high interest rates were going to continue into 2025, and that was going to make new investment in short-term rentals very difficult. And that's exactly what we saw. Supply growth overall in the U.S. this summer was only 2%, and 2% growth for, like, if we would have been talking in 2022 and 2023, we were talking about 20% growth. Like, this is just entirely different environment that we've seen. And then on the climate side, this has been really a global trend that we've seen, especially and we saw it during the summers in Europe this past year, where just extreme heat pushed people to the Nordics. We're seeing that this winter ski season has been one of the worst ski seasons in 30 years in terms of amount of participation in snow. So it has been moving investments into new and interesting markets. And my parents own a bunch of vacation rentals up in Maine. The Maine market during the summer might be the new Outer Banks when we think about 10 years from now in terms of and where people are wanting to go for their summer vacation if our summers keep getting warmer and warmer. And then one of my favorite trends over the past 2 to 3 years has been sort of the larger vacation rentals driving market growth. It's been a real consumer trend. And to me, it sort of goes back to the competition with hotels. Because prior to joining AirDNA, I spent 10 years in the hotel industry doing hotel research, and we were navigating from the hotel industry this emerging sort of vacation short-term rental market, how they were sort of coming and competing head to head. And now we've seen a divergence of those properties that compete most with hotels. Hotels have actually been doing really well where the hotel product has been differentiated and has seen a lot of growth. But where those properties that really differentiate, provide unique experiences that only vacation rentals can do, that's where we've seen growth continue to expand. So those properties that really differentiate themselves, provide amenities, they're on the coast, they're on the mountain, they really are in locations that hotels can't and won't go to. That's where we've seen the best performance for traditional vacation rentals.
I know Tiffany wants to unpack some of that, but those of us that have a real estate sales side, I know it's not your primary focus, but you brought it up there, and I want to just pursue a philosophy because sales were down last year, no question, particularly in our market. But I think there is maybe a hidden market or a phantom market out there of people who maybe bought properties during the pandemic, anticipating those income levels that were there at that time, and they're not realizing the income they had. So I feel like there's going to be a real surge of vacation rental properties coming on the market for sale as soon as things start to turn. You have any thoughts on that?
Yeah, and we've actually been seeing it in quite a few markets where revenues have really turned. Like one of the biggest examples of that for me is Broken Bow, a market in Oklahoma. They have seen a real surge in properties available for sale. We've seen now home values down about 20%, which is a pretty big reversion on price. And now we're seeing a lot of owners sort of churn out. We're seeing new homeowners come in with maybe more realistic revenue expectations. They're at a much more realistic cost basis, what they bought that home at, and then the revenue expectations associated with it make those, I would say, better owners to work with than someone that maybe bought at the peak in terms of home values at revenue expectations that weren't sustainable. So that we're seeing a bit of a reset in that market. And I think ultimately it's painful for those owners that bought, but it does create a much healthier market to have some of those resets.
I'll add on to that too, because in the last 6 months, we increased in one of our long-term businesses in North Florida by 15% because those vacation homes or those owners who bought at the peak of the market who are not receiving that return on investment are moving those homes to long-term because they can't sell it for what they've put into it. So they need to have a consistent amount of money that they know and that is coming in. And so we've had to transfer those, and that's been a huge market. So if you have the ability to do long-term or in the 30-day market, maybe that's a possibility for you for some of these. But I do want to touch on one of those really quick before we get to our 2026. As Tim mentioned, I was ready to dive in. But for me, I think that it becomes so much of a narrative because everyone thinks that every community is just so full of short-term or vacation rentals. And really what you're saying in those facts of the decrease of supply, and I think that's going to continue, is that really it's a narrative of the vacation rental market has emerged as a type of accommodation and most people know about it now, whereas before it didn't have the same type of context. And so I think that we've done a really great job of marketing it, but it doesn't necessarily mean that that's your overall inventory for accommodations for your area and takeover. So I think that that's really important for people to note. And I like the experience side and that the vacation rentals having something different than the hotels offer, which is probably a good note for people to take home of what's something that your properties can offer that hotels don't, and are you marketing it right? So we'll get in then before I dive any deeper to 2025.
Yeah,
We'll
do you
go
have
into
any
where
more
we're
opinions on that? Do you have any more opinions you want to share on that, Ms. Edwards?
I don't know. Karen in the back is listening and saying, slow it down, Tiffany.
Yeah, slow your roll here. Come on.
All right. So my question then is, because you hit 100% for your 3 predictions in 2025. What are you thinking are US trends for 2026? Are they the same? Are we seeing different emerging trends?
Yeah. I'm going to go out on a limb and say that 2025 is going to be the low point for supply growth. I
Wow.
do think we're going up from here. And it does piggyback onto some of the trends we talked about in terms of home values, on interest rates, on revenues. So you look at overall revenues, and 2025 was a growth year. So we did see some pricing power come back. We're seeing a bit better overall performance, especially in some of the core vacation rental markets. We're also seeing interest rates come down. We did dip briefly below 6% in early January. We expect to be around that 6%, but when you go back and look a year ago, we were over 7. Like, this is a much better interest rate environment, which is, I think, going to help begin to thaw the real estate market. I talked to a ton of real estate agents, investors, and we are still in a real estate recession. It has been 2 years of record lows in terms of home value sales. And I think most housing economists are expecting 2026 to be a year of growth. It's not going to be back to sort of the boom times, but we are going to start unlocking some sales volume as interest rates come down. And marrying that with, we are seeing sellers that are getting much more realistic about the price that they can get from their home. And without sellers, you don't have buyers. As this sort of unlocks, we think this is going to be a positive, especially in some of our core and mountain coastal markets, that supply could begin to grow again in 2026.
I teased this episode last time by saying that you are an international expert on this. And so for our listeners in Bora Bora, are you seeing trends worldwide that are similar to what you're talking about?
I would say it's been very humbling joining AirDNA and getting access to a global data set where we're tracking every single vacation rental around the world. I'm getting to go to Rome this past summer and speak on European short-term rental trends. I was up in Canada and Banff the year before to talk about Canadian short-term rental trends, going down to Mexico. I would say every market is local. Every market is different. Just like I'm talking about the Outer Banks is totally different than what's going on in San Diego or Phoenix. Like, all of these trends are very local. So what I'm saying about national US, it's very broad. What we're seeing in Europe can vary dramatically by country. And there's some major legislation impacting certain countries in Europe. Spain supply is down 10% right now because of some new listing legislation that went into enforcement in August of this past summer. So that market is hurting. We're seeing similar in Italy, Croatia, where we're seeing listings decline. There's still big growth areas. I mentioned the Nordics and the sort of the climate tourism there. We're still seeing massive growth of supply and demand in Norway, Sweden, Finland. Those are areas I'm super excited about. The Middle East is the fastest growth for the short-term rental market, bar none. When you look at what's going on in Saudi Arabia, Oman, Bahrain, like, there is massive growth happening in that area that is really exciting to see, and how those markets are evolving and really pushing for more short-term rentals to come in, more investors to bring in inventory into those markets, because they're really trying to transition their markets to tourism, and they see short-term rentals as being that accommodation platform that can sort of turn on the dime, that can grow really quick, where you don't need to wait 2, 3, 4, 5 years for a hotel to get permitted, developed, and built.
So would you say that some of those guests would also be looking at those accommodations as something that is a different experience than hotel? Are they similar to those US consumers? Especially because a lot of us travel all over the country. But in some of those emerging markets, what are the expectations there, or what's driving some of that experience? Is it similar to US?
Yeah, a lot of the inventory growth looks much more similar to what we saw in the US in 2018, 2019, when like the rental arbitrage was growing, saw and the massive growth of the likes of Sonder, Romeo, K. Alfred, Zurich. Like all these companies now are defunct. They're no longer around, but they were the driving force of US short-term rentals during that period. They were seeing massive amounts of venture funding, and that's much more the variety of what we're seeing driving growth in these areas. They're needing just core lodging demand. They've got a lot of multifamily buildings that have been developed that can be used for lodging, and that's where we're seeing a lot of the growth. So they've just got so much demand for tourism there. They just need more accommodation in those markets, and there's investors lining up to be able to help accommodate that.
In our last episode, we covered regulatory issues, mostly in the United States, and there's a lot. So
Yeah.
if you folks didn't hear that episode, go back. It was really good. She's very opinionated. So at any rate, I'm going to steal her question. As these regulations continue to limit that supply in certain areas, how do you think it's affected guest behavior? Are you seeing anything that can help us there?
Yeah. So on the guest behavior side, what I've seen is that guests, if the listings don't exist, they're going to go elsewhere. So like you go back and look, and my favorite example now is what happened in Telluride of like there became legislation that came in, limited supply. And what happened? Tourism dropped. Like tax revenues all the way dropped. Like they saw meaningful impact to the local economy because they didn't have the accommodation for all these guests that wanted to come to this market. And what happened? People didn't come. So, yes, you see guest trends react to what happens in regulation. Every city thinks they're unique, but every city is also competing against every other city that has I think of cities in like competitive sets too. Like if you're in Telluride, you're competing with Park City, you're competing with Aspen, with Breckenridge as a destination that someone can go on vacation to. And if you all of a sudden make your location even seem less accommodating to someone that wants to go there, people are going to choose to go elsewhere. We're seeing that in a lot of European markets. And what's interesting about what a lot of the European markets is maybe they're willing to have that decrease in economic output. They're willing to see fewer tourists come to their market because it's become too much. So that's where I've seen a bit of a difference, but the guest trends are definitely clear there.
I'm going to clip this, Tim. This is going to go on social media once a week because I think it's from an economist's mouth. You think that when you lower supply, it's going to already increased demand. And that's not necessarily the case because there are other options out there. We saw the same thing in COVID when we shut down for Florida. Everyone moved over to Alabama and Gulf Shores because it was open and it was the same travel time frame for them and in similar feeder markets. And so in areas that were vacation rental dominant or that geographically everything is built out and they don't have the hotel options like New York, where you're going to see a dramatic increase in pricing, this will affect your tourism numbers and your local economy. I love this answer, Jamie. Thank you.
And you mentioned New York. For 2 consecutive years, the fastest growing market for overall short-term rental demand has been Jersey City and Newark. Like we have seen the demand, if they cannot stay in the city and if they can not stay in New York, they're going to go across the river. They're still going to take that trip. But now the local businesses in New York that maybe were getting that extra spend from tourists that were staying nearby are now not realizing that, and it's having a negative effect on the New York economy.
Yep, that makes sense. So I'm going to shift over to another part of your expertise, which we've talked in the past on a couple of our other podcasts of pricing dynamic changes in 2026. With your areas of expertise and research on competitive pricing, based on what you think the trends are for 2026, what pricing strategy should we be considering or starting to implement as we look ahead?
Yeah. So, and I feel like, and Dharm, this was a theme that both us and Key Data sort of touched on, was sort of the changing booking patterns of our lead times getting shorter and shorter, the sort of changing mentality of guests on when they're going to book for those vacations. As occupancy has come down and it has become less and less imperative that you book 6 months in advance, as you go and look 2 months in advance, and you're still going to be able to find a great listing that you can book for that trip that you want to take. So unfortunately, guests have been moving more and later and later in terms of the booking process. And that's something, if you're not paying attention to in your market, like you still have in your mind this like ideal booking window that's 6 months in advance, and now your market's moved to it's booking 3 months in advance, and you're discounting because you didn't get fully booked when you thought, and then your competitors are, you know what, like the consumer has shifted just because you're still in that old mentality, like I'm holding out rate longer, to that new sort of booking window that people are looking at. And so one of the biggest suggestions that I'd suggest to someone is taking a realistic view of how guest behavior has changed in your market, and then how you need to react to your pricing trends or your pricing settings. Like if your market is still 7-day bookings and you're keeping onto those 7-day booking trends, great. Like that works. But if your market is now moved to, and half the guests are now booking 4-day trips, they're doing long weekends, they're not booking that 7-day, and you're sort of holding on to this romanticized view of how your market used to be, that could really impact your ability to drive demand in this sort of changing environment. For better or worse, the OTAs have really changed a lot of guest booking behavior. What's an interesting one for me is Airbnb's recent rollout of buy now, pay later has actually started pushing booking lead times out in some markets, because someone can make that reservation. They don't have to put any money down, and then they can wait a month or two before they actually have to put their first payment down. So it's actually been expanding the booking window in some of these markets, which has been a reversal.
I'm going to clip that segment and I'm going to play it for some of my property owners. And you are on fire today, Mr. Lane. So we're into February, believe it or not. So for 2026, are you seeing some trends now that are coming clear to you about winners? And maybe you mentioned ski resorts. They're probably the losers right now. We've got all their snow at the beach. So what are you seeing?
Yeah, and we were just looking at December, January trends internally, and coastal market bookings have started off really strong for spring break, summer for 2026. It goes back into a broader theme of 2025 that we saw, is the sort of mix between bookings that were domestic versus international. 2025 was a weak year for inbound international. 2025, though, was pretty strong for domestic demand. So if you were on the higher end and accommodating domestic travelers, you saw and pretty good trends. If you were maybe accommodating lower end travelers or international travelers, 2025 was maybe a weaker year for you. Then when we look at this winter in terms of bookings for for the month stays, so a lot of ski trips are planned like this. This has been a very tough winter for the Western ski resorts in terms of snowpack, down like 50% compared to normal. That has, and those markets down anywhere from 4, 5, 10% in terms of overall occupancy during peak season. Like that is rough, and we see bookings down in mountain markets in December and January. That is definitely a trend we're watching. And then Canadian travel to the U.S. in terms of overall booking trends is down now about 40% year over year. And there's quite a few markets that are really dependent on Canadian travelers, especially during these winter months. So you think about South Florida, the snowbirds, Southern California, Arizona, anywhere from 5 to 10% of their bookings are coming from Canadian travelers. And if those bookings are down 40%, like that can have a real meaningful impact on your ability to maintain occupancy levels and have any pricing power.
What about, you mentioned at DARM, so the Data and Revenue Management Conference, one of the themes was also the K-shaped economy that we saw a lot throughout last year, but also Q4, of, the wealthy continuing to increase. And so those luxury homes doing very well because a very dominant part of the 1 to 10% affluency in the US specifically are spending quite a bit of their money on travel. Are you seeing that still? And if you are, What about the people who have maybe the 2 to 3 star accommodations? How can they compete in a K-shaped economy?
Yeah. So we're still seeing that trend play out is and apparent any way you cut the data, any market you look at, even at more budget markets, and you see the K-shape playing out where the higher price homes are doing well, the lower price ones are not. So you see it play out across the board. When you look at the lower price homes and the ones that are doing better or worse, it is the ones that are doubling down on guest satisfaction and making sure that if you get someone into your property, you're going to get a 5-star review and you're going to over communicate. You're going to make sure that they had the best day because and most of these markets are super competitive. There's 20, 30,000 listings in there. So if you can be the best of the lower performing properties, you're still going to be able to outperform. But what it also means is those property managers that don't have as much of their hands on their steering wheel, driving really good guest satisfaction, they're dropping in the OTA rankings. They're having a tough time getting repeat bookings. It's almost like the K-shaped economy from the consumer is causing K-shaped performance for property managers, where the best are getting better and the worst are actually seeing weaker performance. And the biggest spot where I've seen that is in owner churn. So that's something that we track. So like average property manager score on Airbnb is like a 4.7. And those property managers that have above a 4.7 overall review score have pretty typical owner churn of about 10%. Those property managers that have a review score of less than 4.7 have seen their owner churn increase on average to over 20%. And where if you go back to 5 years ago, there was not nearly that differential in terms of churn. So owners see it, guests see it, and it's playing out in terms of vacation rental manager performance.
Talking about the winners are getting better, the losers are not doing so well. Where are the locations that you would pick as winners and losers specifically? Because I know AirDNA annually, I believe, picks out kind of the best places and locations to invest. Should you want to have an asset of a property and rent it out short term? Where are you picking winners and losers right now?
Yeah. So we did just release our best places to invest report. Between us, it's my least favorite report that I do at AirDNA because it's ranking every city against each other. Like I love all these cities to invest in. But what we did do though is broke out the list by price points and by location type. So best beach markets, best ski markets. I'll highlight one of my favorite, or if I was investing, maybe where I would be looking. So with a budget between like K to 1 million. So you're maybe putting 20% down. You've got 150K cash to invest. Number one market at that price point is Santa Rosa Beach, Rosemary Beach, Florida, which I thought was fun.
Oh, I don't know that place. Just born and raised there. It's okay. Thank you, Jamie. I didn't pay him to say that.
And that price point was the Ozark Mountains. So two differentiated markets, both now in 2026, showing a decent investment opportunity where you go back a year or two and those markets were not anywhere close to some of the best. So we have seen some mixing up of top markets.
And I want to say this really quick too, because from a regulatory perspective, it sounds like, oh, we're all investors, corporate greed. But keep in mind, any property that you own is an asset and you want to be able to have some type of return, whether you're living in that home or you're having that home work for you. Same way as if you stock money in a stock market, right? So you have to make measured decisions with the finances that you're expending. And so that you put this report out, I think is really valuable for people to go in and research. So thank you for that.
Yeah. And I'll say the reason why we still do it is we try to give investors the framework to think about what markets they should be investing in. Shouldn't be just I used to vacation in this market. It'd be great to own a home there. If it is going to be an investment, you should think about it not just from your feelings, but like, how much is this going to earn? What is it going to cost me? Is this going to cash flow? And help owners, help investors go into it with at least, yeah, you can have your preference. Yeah, you probably want to go use the home some, like you want it to be in maybe a place you're going to enjoy. But here's the framework to think about, making sure it's not going to be losing your money if you want it to be a cash flowing asset, a good investment for you.
Fantastic. It's gold, baby. We like to give people keys. You gave us a lot of keys. And so one of the things about keys is it unlocks doors. And we want to unlock a little more about Jamie Lane here in our infamous segment called Quick Draw. This is where we ask you these off-the-wall inane questions, and you can answer just a few words or more wordy if you like. So somebody start a clock. All right, Jamie, I know you are a proud graduate of the University of Georgia. If you had a meal to eat in Athens, are you headed to Mama Boy's for biscuits or the grill for feta fries at 2 a.m.?
I've spent way too many nights at the grill at 2 a.m. I will definitely say that. Though it would always be a tough choice between the grill or just a chili cheese dog from the hot dog cart on Broad.
So I went to Georgia as well. Mine would be Little Italy. That was always my stop, and the cheese would burn your leg as it fell to the ground. But yes.
Yeah.
Well done. All right, I'm going to use one of Tim's. You're scrolling through TV. What is a show or a movie that you always stop to watch, even though you've seen it 1,000 times?
I'll say one that I just watched with my kids for the first time this past weekend. We watched Cool Runnings, and we've got the Olympics. It brought back such good. Like I've probably watched that movie 100 times. Like, and it was my kids' first time, and they were already quoting it. It was great.
Fantastic. How about a skill or talent that you don't currently possess that you wish you had?
Currently, I work with software engineers every day. I pretend to know something about code, like with our data science team, but I would love to and now everyone's doing this vibe coding stuff. I'd love to know how to do basic software engineering.
Well, that brings me to the question I ask everyone, which is, what is one way you use AI every day that you could not live without?
My wife will laugh if she listens to this, but I use AI right now to drive my workout schedule. So I upload every workout I do into the AI. I describe the workout. It analyzes the data. We make a plan for the next day, given my goals. I love it. It's all personal, but it's such a good, if you tell me what to do, I'm going to do it. And it does a great job of telling me what to do. And then such great positive feedback. It's like, Jamie, you did such a great job. You're right on track. It's amazing.
Fantastic. Okay, so you are obviously a tech guy. Are you inbox with 10,000, or do you have a net zero inbox philosophy?
I see the little indicator on my inbox right there, and it's at 17,000 right now. So
My goodness.
I appreciate
You've
that.
emailed me in the past year, and I haven't responded to you. Please feel free to send it again.
Text instead. All right, where's your favorite vacation spot?
Since I've been born, we've been going up to Maine, the coast, Mount Desert Island. My parents lived there during the summer, so we go up there every year for a week, 2. I think this year we might be up there for 3. Is the best spot.
You sure you're not on retainer for the Maine tourism board? That sounds like a bitch. All right. Last one for me is, what is on your bucket list?
Bucket list. I'm crossing something off my bucket list this summer. I'm speaking about climate tourism. I'm taking the kids, my wife. We're all going to Iceland for 2 weeks, and I've always wanted to go there. So we're going to cross that one off in July.
All right, if you weren't in your current position, what would be your dream job?
I wouldn't say this is my dream job. I say it's my backup job, though I really want to do it. Maybe it is my dream job. I really wanted to be an economics professor. Go teach high school economics. I think would be so much fun.
He would be a great teacher, though. The energy and enthusiasm was fantastic. So we thank you for playing our little inane game. And as usual, you win nothing but our great, undying appreciation for exposing yourself to the few listeners in the 90-some countries that we reach. So it's our little secret, all these things you talked about. So, all right, Jamie, you referenced a lot of data. We love data on this podcast. Where can a listener find info that you put out?
We do have a free blog at AirDNA. We probably put out 10, 20 reports a month. And I would highly suggest following that. I put out a podcast, the SCR Data Lab. It's a weekly podcast where we talk about data all the time. So if you're interested in data, take a listen. And then I post on LinkedIn constantly, so give me a follow there.
Yeah. He's got a long resume, folks. He was a keynote speaker at DARM for the last 3 years. He's also spoken at some other minor events like the SCIF Short-Term Rental Summit, VRMA conferences, the STR Wealth Conference, Hotel and Data Conference, Focusrite, IMN, and probably about 25 others. But now your resume is complete because you have been a guest on the Vacation Rental Key with TNT. So there you go.
This is the best. Thank you, guys.
He's the chief economist at AirDNA, and he just dropped a load on you today. So you may want to go and rewind and listen to it again and take some good notes. So we appreciate Jamie. We appreciate you for listening. Please like us on our various apps that we're out there. You're listening to us. Give us a good review. We appreciate the exposure so we can reach 91 countries next time. So until next time, so long, everybody.
We'll be talking to you next time.